Hello everybody, welcome to another live trading session. I'm a little bit late today due to personal issues, but it doesn't matter. We will still analyze the New York AM session together, and I will see if I can find some setups and trades and give you my opinion about the market. Please be aware that all being said in this video is my personal opinion only and should not be viewed as trading or investment advice. If you do anything or if you invest or trade anything based on anything what I say, please be aware that this is your own risk and that you can lose real money. I would not recommend that at all. Yes, so what I want to do, what I want to start with is the news calendar. So there, usually I go on forexfactory.com to check out the market news. We can see that today on Wednesday the 20th we had just had news at 10 a.m. High impact news, consumer confidence. I do not look at the number. I don't care what the numbers show, if they're better than expected or worse. I just use the numbers to see when movement in the market occurs, and I'm doing my trade and my trade decisions and my analysis based on what I see in the chart. So that being said, we can see that we had already a significant up move in this session from the 9:30 opening, around 13 handles so far, which is not too bad. And we can also see a little market structure shift here. So let me show you what I mean. We have a high, a low, and we have a higher high. So this high is being broken. So the low is taken out here, the lows, and then we have a break of the high again, and since then we move. So this is what I view as a short-term market structure shift, a bullish market structure shift, and we saw higher prices subsequently. We have a high here, so I think it's likely that we see this high at 4824.25 being rated. We just took out the highs here as well, and yeah, we had a nice move already. I just see entries on the 1 minute chart so far. We missed that because I'm late today anyways, starting the session, but that doesn't matter. We can still analyze the market, and the sessions, the setups and the opportunities do not only form at the beginning of the session. Sometimes they form in the middle, or sometimes they form at the end of the trading window I'm using, which is 10 a.m. New York AM time to 11 a.m. New York time. And we can see two fair value gaps here. 1 minute, I will explain a little bit later. And we had some retracement into these gaps and already showed some movement, 5 pips, so pretty would have been decent enough for a short-term day trade here. And yeah, what I want to see is if we take out this high and maybe find strength to continue at the moment. If we go on the regular trading hours, we can see the opening range gap, which we had yesterday here. We can maybe just use that with the annotation already. That would be great. So I borrow that. And we can see on the 5-minute chart, we can pretty well see that we stopped trading yesterday at 4:10 New York time, and that we reopened at 9:30 today on Wednesday. And so there was no trading in between. We can see this gap here, and that's what I'm annotating. So I'm taking the high, the close of the candle on Tuesday, and put this shaded area to the open of the 9:30 opening candle here. And then we have our opening range gap. So this is an area that is very important for my trading. It's an area that shows support or resistance, and it's an area where price is likely to draw into under certain conditions. I will also borrow the New York midnight price for later, so we don't need to do these annotations again. Yesterday, I'm glad that we had that I could show you a trade. I entered a long in this fair value gap here, and I exited at a target pretty much at the high actually. I entered at 4.8. Well, no, I closed here, so but not far away from yesterday's high. And I was able to live stream it yesterday and show you my executions and my trade management. Let's put the annotations away so that we don't get distracted here. We don't really need them anymore. So let's check out the electronic trading hours again. And annotate the New York opening price here. So Tuesday. So midnight is around here. Here we have the midnight candle, perfect. And what I'm doing is I'm taking the midnight New York midnight price, put the line to the opening price, and then I have an indicator basically if I'm overbought or oversold. So I'm looking at the New York midnight price as an overbought, oversold indicator. What I like to do is if I'm bullish, I like to buy at or below this price. If I'm bearish, I like to sell at or above this price. At the moment, we are right at the New York midnight price. So whatever bias I have, it's a good time to enter at this price. And then I'm also going to annotate the 8:30 opening price. That's where the pre-market session starts, and I think we have the bond opening as well there. At 8:30, that price is also I take the opening candle, and that price is also very influential. So depending on where we are, at what levels we are, I use either the midnight price or the opening at 8:30. So we can see that we have consolidated a little bit at the opening range gap around 10 a.m. and moved up from there. So we had some support here actually. So let's go back to the higher time frames. So as I already said yesterday, my higher time frame is bullish, so I stay long until proven otherwise, until I see a significant market structure shift. I will stay with an overall bullish bias, because one should not pick tops and bottoms. And yeah, so I will stay long until proven otherwise. At the moment, it's pretty difficult to determine a price target, because we have taken out equal highs here from Monday, January 22 and Monday, March 2022. So yeah, so we have the highs taken out, and the only tool I can now determine how far we go on this chart on the left side is the swing projection with the Fibonacci. There is no price action to the left, so it's hard to outline some levels here. And we are extremely bullish for now. As we can see, we have been bullish. I'm not extremely bullish now, but we have been bullish extremely now since October, and had some pretty sustained price moves here. But there is nothing at the moment I really like on the weekly or daily chart. Nothing I really can outline here. We have to be careful above highs, because we might, above highs, we see either continuation or reversal, and we might see a reversal. No one can say what we're going to see next with 100% assurity. On the 4-hour, we have some more insight. We can see that we have a fair value gap here on the 4-hour chart. I will just outline and delete it again. And we had today in the morning, we had a drop into this fair value gap, and since we have a rally again. So we have bullish support, and we have traded through this down close candle, so it looks like we're forming an order block here, and that's bullish support on the 4-hour. So again, I'm looking it's almost taken out. I'm looking for this high being taken out, and we will see if we can hold ground above the high here or if we reject quickly. So what I would like to see to maintain a bullish bias in today's session is that we see strength, that we go above this high, and that we remain above. If we just take out these highs here, or what we have taken out here, and then reject quickly and go deep inside, back deep inside the range, that's not a very bullish sign here. So we also see an old fair value gap here on the 1 hour chart. So also an area where price came back to in the morning to find support here and go back up. So again to the New York midnight price. So if I would be bullish, I would go long here. If I would be bearish, I would try to sell short here. At the moment, there is not a clear bias for me, also not a clear setup at the moment. That can change anytime, of course. At the moment, I think I prefer the bullish side, but I will stay on the sidelines for now and see if we get some more price action and get a setup at a later point in time. And here we go, high is taken, nice to see, and retail probably has their stop above here, sees that thinks that their stops are safe here. They had this run up and they saw the decline in the morning, and they probably sell short here, expecting it to go lower. And at the 9:30 opening, they got proven wrong and punished now. They had their stop above here and thought, oh, it's a retracement maybe, or we are safe. And now they got margin called. And again, what I want to see is that we find some support here, some continuation is not unlikely in my opinion, and we can see if we have some setups here or later, and we can see that we had this fair value gap here, formed at 10:05, big green candle, no price action immediately to the left or to the right. We have the high here and the low here at 4821.5, and this area is what I outline as the fair value gap, as ICT calls it. We had some consolidation here, and now we have the next breakout or move up to take out previous day's high in a overall bullish market so far this year. Pretty nice year-end rally. If you like the content, if you like the video, if you like us to continue with the live trading sessions in the channel, would be really cool if you could leave a like if you like the channel, Mint Markets. If you are so kind and give us a subscribe or a like on our video, would be cool. And you can also follow us on Twitter on Mint Markets, hashtag Mint Markets FX, where I post links, trade ideas, and also give you updates on the trading sessions and what we are doing. So far it looks promising for the bulls. No downside stops rated so far. And I can, sorry for yawning, but pre-Christmas time pretty stressful. A lot going on in my personal life. A lot of things to organize and to manage. And didn't sleep a lot the last days. And I'm really starting to feel it. But there is no time for sleep at the moment. Maybe during the Christmas break. And I will try to stay awake during this stream. For you guys, it's easier if you fall asleep during the stream. You can just turn off. Yeah, what I also want to outline is the session highs and lows. We have rated them already, but I will outline them nevertheless. So therefore I used the 5-minute chart, and I'm taking the highest high between 2 a.m. and I'm taking the lowest low between 2 a.m. and 5 a.m. And then I have my range, that's the New York AM range. And I will use this as targets and as indications what we did. So for example, I use this to determine where the liquidity is and where my targets is and where potential turning points are. So we can see that between this time in the AM session, we have stops below here. So ahead of our session, this low has been taken out already. We had a market opening at 9:30. We had a drop here. So after the market opening, we can see that this low has been taken out. Stops here are gone. Everybody who has had their stops here is obviously stopped out, and liquidity remains above this buy side liquidity here. So people who were short have their stops still here, or had their stops still here above this high. And so since we're bullish, the market was seeking upside liquidity draw, and we see the stops being hit. I'm sorry for being tired. And we can still outline the other sessions as well, but they are not very influential in my opinion, because we're already above. We can only, so that's the PM, previous New York PM trading session. yeah, what we can do is to take the high and the low here again and see where the liquidity is. Also, the liquidity here is rated below this low here, and the liquidity got rated above this high here as well already, obviously. And now we can see what I wanna outline is the high here, and I would like to see price stay above this high here. I want to see strength, I want to see support, I want to see price stay above this high. Otherwise, this might have been just a stop run if we go deep inside. And you can also see we had sell side liquidity here down below. So one concept I use from ICT is internal range to external range and external range to internal range liquidity. So you can see that we have a price range here, a price swing here. So after we reached a high yesterday, we retraced back into the range here. So if I take this range here, high to low, we came back to the 50% level and took out the stops here. Everybody who was long from yesterday had their stops trailed to here. They're stopped out now. Market seeked liquidity, and we got internal range liquidity, and now from the internal side of the range we got external liquidity again. So this high here is external liquidity from this range. So we got a nice move from internal range liquidity to external range liquidity here today. So far I don't see a trade setup. I mean, here we have a fair value gap here now. So with the expectation being bullish, we could enter along here. The stop would have to be below this candle here at 1025. The only risk in this case is, or not the only risk, but the risk in this case is that we have already taken out highs, so I don't have a clear target yet. The only thing I can do is a fib projection from here. If I stay with my bullish buyers, I can take the swing here from the high to the low, and I can project that out. Half standard deviation, full standard deviation, that would put us to 4840 in the S&P mini futures. So that would be a nice target. On the other side, I have a swing projection. I can do a swing projection here as well. I have my breaker here, so I take the high to the low and I project it out in time. We have here one standard deviation, 1.5, two standard deviations, 2.5. So we got two standard deviations got hit already. We took the high out. But we might see some more upside here. I'm willing to risk one contract here. I will stick with the bullish narrative here. I will take a tight stop here. We have a 5-minute fair value gap, and I will take a 5 pip run here from my entry, which is 4.824. I will trade to 4.829.25. That's a 5 pip run now, and my first target is the previous high. So what I want to see is this high being taken out and a close above here. And so as soon as we take out the high, I don't want to see another pullback. I want to see a continuation. My stop is pretty tight. Do not have a lot of risk on here. And we have 3 pips roughly. So to outline the trade, we have trade entry here. We have a stop loss here on the 5-minute chart. Again, the stop needs to be below this candle here. So the low is 4.821.5 and the risk potential 5 pips. So we have a 1.8 risk reward ratio, which is pretty nice. And I want to see if we can stay bullish and take out this high here and stay above there. So once we take out this high here, so that's my first target. If I would have a partial on, I would probably take a small partial here, even though it's not a lot of pips, 3 pips roughly, but target 1 will move stop after taking out the high. So nice. So we got, that's the first small victory, even though we have not hit my target yet. But now I will put the stop below this low here. I do not want to see. I will reduce my risk here. So we have almost reduced risk to half, and I don't want to risk a full stop out at this point anymore. If I'm correct and the trade is good, we should see a continuation higher now. I'm going a little bit further. I don't want to see this 50% of this candle, so I put it basically to 0 because I don't want to see the midpoint of this. Yeah, so that's exactly where the trade entry is. So my trade is at the moment risk-free. Actually, it's not always good to move the stop too early because I might get stopped out, and I might get stopped out before, even though my target gets hit later. So actually that's a risk which my model, I'm actually wrestling now with this decision a little bit. So to follow my model, I should actually stay below here. If I get stopped out, then it was not the best idea to move the stop here. However, I have no risk. Now now I'm stopped. But however, I do not have, at least I don't have a loss here. And what I'm thinking, what I'm wrestling is, so was it the right decision? Because I could have my stop, my model tells me that my stop should have been below this fair value gap, the candle below this fair value gap, so I should have been here, stayed here. On the other hand, if we take out this high here and then take out the low, we have a market structure shift, so that's also not what I want to see. I will take a re-entry just because I wanna know what my trade is doing. I will now put the stop again where my first initial entry was, so according to my model, and I will just see if the stop is good, if the model holds true, and I will take the same target again. So my entry is a little bit worse this time, so I was not the best idea to, I got a little bit better fill at the first place. However, I was not happy with my decision to move the stop, obviously, and I want to give the trade a second chance. I didn't lose anything, so I can take another trade, and I want to give my trade the proper room to pay out if I'm in fact right with my trade idea and my bias. Again, please do not copy what I'm doing. Do not invest real money or trade with it. You can lose, you can get stopped out, and I cannot be liable for you losing your money by not doing what you should do. And we can see now that the risk reward got worse. We only have the same target, but I have only a roughly 1.4 risk reward ratio because my stop is a little bit bigger now. However, I will give the trade room now and I will wait. If I get stopped out, I get stopped out. My stop is in place according to my model. My entry was not perfect, but it was also according to my model, and I will see if I get my 5 pips in this trading session. I think the chance is there at the moment. The trade is still in play, and you can see we took out this high, we went back into this 5-minute fair value gap. Here we have a volume imbalance, there's no bodice candles here, so price likes to go back into this volume imbalances. We have a bullish order block here, this last 1-minute red candle before we go up. So in my opinion, the trade is still valid. There is nothing I need to fear. Our first target got hit. We were not able to take any partials because I just had one contract on, and maybe actually I should, for showcasing purposes, I should not trade with one contract because I cannot do any trade and management with partials here. On the other hand, in this environment with all this holiday volume and uncertainty, all these wars, it's also foolish in my opinion to think that you have very high probability trades at the moment, and if you risk a lot of money and if you don't be careful with at the current market conditions. You are exposing you to a lot of risk, in my opinion, unnecessary risk. It's better to come back at conditions where you have really high chance in your favor that your trade is going to win. So what we're doing now is we're just waiting. I will remove this. Our first target got hit. However, that's a very small amount of pips, so I was going for the longer swing. What I think is possible if we stay bullish, if we continue bullish, what I think is possible is we can see a swing, this last downswing projected. We projected up. I want to use the bodies here to be more precise. Oops, that's not what I wanted to do. So if I take the bodies, for example, on the 1 hour chart and the bodies on the high to the low, and I project that out in time, we have one standard deviation, half standard deviation at my first target, at my 5 handle target, so that's good. And we have another standard deviation swing projection at 4835.5. So I think that is a level we can see in the future. So and I will label it swing projection target so I will leave this on my chart, and we will see if we can get this, or if we just had a stop run. So at the moment it doesn't look so promising, but everything is still in play, so there's nothing that totally cancels out the trade idea. We closed right at the low of the fair value gap, which is not ideal. It would be better if it respects the high or the midpoint, and so the probabilities just shifted against me with this price action we saw here. But we might still, I'm not abandoning the trade now. I'm just in with one contract. I'm just doing this here for showcasing purposes. So sometimes your model fails as well. So I will commit to the trade as long as I think it's valid. And I think it's no longer valid when my stop is being taken out. If my stop is being taken out, I will not take another trade in this session, and I will certainly not re-enter a bullish trade. I will not re-enter a long. And again, the reason is because we've taken a high out here, and we might just see low. We might just see a stop run here and a lower price as well. But I think the probabilities are still higher that we see continuation to the upside, and one target, in my opinion, is possible, is the 4835 level here on my chart. I will leave it here and we will see if we hit that at some point. What I want to see now is a bullish up close candle. I want to see a candle that closes above this candle here, 1050, and I want to see a close above this candle ideally and strength from here. I don't want to see drop around here or another lower low. Then I think I will get stopped out. And I will just leave the trade on. The session has almost come to an end today. I will leave the session on and I will share the results after the session. I have a tight schedule today, so I have right after this trading session I have another appointment. So I'm going to say goodbye soon. I hope you find the analysis helpful. I hope you get something out of it. I hope you like the videos. If you like it, please be so kind and subscribe to the channel Mint Markets FX and leave a like here. Would be really cool and helpful to grow. And don't forget to follow us on Mint Markets FX. And I will try to do as many trading sessions as possible. I will try to be in front of the charts almost every day, as long as personal life allows it. And I will do my best. I think I will be back tomorrow at 10 a.m. as well. Should be possible. And my personal trading session is now over, so it's now 11 a.m. So my model tells me that I cannot take another trade entry from now on. So that's when I try to close my charts and go away. I have a trade on which is technical still valid according to my model, so I will just leave it here and see if it can pay out or if it fails. The trade entry needs to be between 10 and 11, but the trade can unfold also outside of this trading window. So I will let you know about the outcome, and I wish you a very pleasant afternoon, evening, goodbye, and see you next